So, the Europe Builds podcast is all about uncovering the untapped knowledge within the European startup ecosystem. And there's no better place to be than the DOERS Summit, where for the very first time, founders, investors, and operators are meeting up to turn their ideas into reality.
The timing also couldn't be better. Some European problems may persist, but we're finally seeing winds of change, from the new Commission's competitiveness compass to reducing internal market barriers. There's a lot of room for growth and a lot of room for hope. So for all of this and more, join us for this series of Europe Builds episodes showcasing some of the greatest founders, operators, and investors from the DOERS Summit.
Alex, it's so nice to have you here today.
Thanks, guys, for the invite.
Thank you, Alex Vamvakas, founding partner of Evercurious. It's an early stage VC, kind of new in the market, right? So we're going to start with a question that is on everybody's lips today at the DOERS Summit. Who are you and what do you do? So if you could give us a short elevator pitch, particularly about Evercurious and what you sought to achieve with it.
Great. Thanks. So Evercurious is, as you said, a deep tech VC early stage. We're up and running since November. So I think still we're officially the youngest VC of Greece.
For a little bit longer. A tiny bit, I feel.
It feels so special though, as long as it lasts. So we're quite early stage, but we want to focus what we call deep tech. Deep tech is kind of a buzzword nowadays, but what we consider deep tech is real technology that takes some serious development behind it. Usually you find this in universities or academic setups, PhD people who want to commercialize their research, this kind of thing. Not specifically, we don't have a hard requirement that you need a PhD, but that's the general idea.
So there's a kind of a connection with academia, right? But in the space that you're looking at, in the stages that you're looking at, what prompted you to focus specifically on that? Both, as a fund, but also you as Alex. Like, what is it that attracts you to that space?
So I think it was, looking back, it's really a natural evolution. I'm a mechanical engineer myself. I studied here in Athens, then moved to London, did my master's there, then moved to Geneva, started working at CERN, designing particle accelerators. So really deep in the research side.
Yeah. Deep academia.
Yeah. Really deep, which at some point I got a bit, I would say fed up with the pace of development in the research world, which is great for what it is, but it didn't cut it for me. So I said, how can we accelerate things? And I said, let's join a startup, because that's the fastest you can go, right? Yeah. So I joined the startup in medical devices in Switzerland. And really, I saw this kind of transition from academia to business, let's say. And this was really, really interesting for me. How do you take fundamental research, make it into technology, make it into product, make it into a successful business, right? So I was really fascinated by this trajectory. And this led me to a job at an asset management firm in Zurich, where I was there to kind of be the middle person between the super banker type of investor, very late stage, listed companies kind of thing, and technical founders, which is completely different, like two completely different worlds, right? And I really enjoyed this, being somehow in the middle, which led me to become a VC investor. And especially in this space, because I really wanted this transition. That's the personal side. And then on the more business side, I think that we're having real problems in our world, right? Which I think you need real technology to solve. I think we went a bit past this era of marketplaces and easy to. I don't want to make it sound too easy, but this kind of three founders in a garage building a product overnight,
or like quick fix, maybe. Yeah,
which was essential and created some great stories, and will continue to create great stories. But I think that when you apply real technology, you have the potential to solve real problems, and hopefully make some money in the way.
Definitely. And you've been like an investor, you've been also an angel investor. Can you tell us about one of the startups that actually no one believed in and you did? And kind of what were the ingredients that you saw in that startup that said, okay, let's go and actually invest in it?
Actually, to be totally honest, both my personal portfolio and also the Evercurious portfolio are very young. So we don't have any success stories of
Yet. It's like month 2.
Yeah, it would be a really high standard if you had a success story in month 2. But yeah.
But it's a good question, because I think venture as an asset class, and there's a big debate, I think, about that, is by nature consensus. It's against consensus, right? If there's a startup that everybody's, if there's such a solution that everybody believes, okay, that's, the next...
Then it's big thing.
Yeah. Everybody would invest. B, probably much more people would build it, right? So let's step one step back. Before the investment comes in, you have the founder.
Yeah.
And I think to be a founder, you have to be crazy.
Yeah. Definitely.
Like really, for real. You're building something that nobody believes is going to be a success, apart from you and your co-founders maybe, and not even always. And you really want to go and carve your own way. So by extension, as an investor, that's kind of similar. Like you really, if you ask, 10, 20 VCs, I mean, imagine this, you're a founder raising money. You speak to 100 VCs, maybe 1 or 2 give you money.
Yeah.
So that's a clear signal against consensus, right? Yeah. I'm not sure if that answers your question, but that was a bit of evading the question.
Well, one thing I wanted to say about this, and I'm curious to hear your response. So I'm coming from a journalist perspective, right? And through this podcast, I've spoken to a lot of founders. And journalists are not trained to figure out what makes a good founder. Because we look at things like, how do you package things? Are you charismatic? Can you sell a story? Some of the best founders might be terrible at these things, right? So what are some of the traits you look at a founder? Do you think, okay, this you have to be crazy for sure, but what are sort of the other ingredients in the soup that probably make a successful founder or a founder likely to succeed?
I think one common trait, let's say, is the belief in your project. Like you really have to believe, because I see this often. Founders sometimes they don't really believe, or they're not 100% committed. Maybe they have another job that they're not ready to let go, or especially in the academic world, they are also research assistants in the university and say, yeah, let's try this startup, and if it fails, I go back. That's already a kind of a red flag, right? So first of all, you have to believe it like crazy, and second of all, I think you really have to. You can call it hustling, you can call it committed again, I guess, but really. It's not about putting, 80 hours a week, but it's really, the startup needs to be the same with yourself. Like you have to identify as the startup you're building. I think that's really the most powerful founders.
And you are coming from the angle of the investor. You're actually also giving a speech in it. Can you describe me what is an investment or investor-ready startup?
Plenty of people will want to hear this, so yeah.
So I think different stages need slightly different elements. So if we speak really for the first, let's say you're trying to raise your first money. Institutional money. Maybe you have a bit of angel money, which is different angels have different criteria, but let's say you have a little bit going and you need maybe your first $500,000 or $1 million or something, right? So you're approaching VCs. I think the one thing that you need to do is really structure your financial projections, your product definition, product market fit. That's the typical things everybody would try to include in their pitch deck, right? But what I see a lot missing is that everybody's just making very quick assumptions of, the market is this big. I'm gonna sell this much. It's like, okay, but we all know that this is greatly over exaggerated, and that's fine. But what I want to see is the assumptions behind it. How did you reach those numbers? Even if the numbers are wrong, I don't care, but I want to see really how you thought about it. How much research did you put into that? And this somehow be, in a written form that I can digest, right? I think that's the one thing I see missing a lot. And then on top, general documentation that needs to be really on a high level.
Actually, that's very interesting. Remember, we had Alex Loiz in one of our episodes, and he was saying that he was shocked about how different the US versus the European market was in terms of like whenever he was pitching.
Yeah.
And whenever he was in the US, it was all about kind of the bold vision. Like, didn't care about numbers as much.
The chemistry, the idea.
The chemistry.
Yeah.
And as Europe, kind of, we're more like factory-driven, which is not a bad thing. And do you see kind of that readiness changing between stages? Like what you're expecting from a seed level company within the deep tech space versus a kind of Series B?
The maturity of the data and the metrics and the whole story needs to be a little bit different. The assumptions need to be way more specific as you grow, because now you know, right? When you're just starting, you have this excuse that I don't really know. I have to test the market, I have to test the product, which is fine. But a couple of years later, you should have already a few tests, right? So your assumptions need to be narrowed down to more specific numbers. And I think that the overall maturity of the company, which is reflected generally on the material that you're presenting, is also, evolving, right? Mm-hmm. So it's not a single thing. It's a general, more professional, let's say,
makes sense,
way of presenting.
One last question for me is around boards, right? So I'm actually part of a board, and like you I'm sure you're on plenty of boards. How do you see your role as a board member with regards to the startup? Do you get very hands-on, operational? Do you just kind of appear there once every 2 weeks and 2 months and kind of give an opinion?
Consult, yeah.
Well, it depends, as always, right? I think that for starters, you should be more on the advising side, right? Not ready to go hands-on, but a priori, you should need to be hands-on, right? Like if the founder needs so much help, maybe it was not a very good founder to begin with. Of course, you want to give them the space to operate and do their thing and so on, and then you give general direction. Having said that, of course, there are cases where things don't go so well, or there are some very big strategic decisions that you have to really step in and say, okay, guys, what are we doing here? Where do we want to go? Who are we hiring? Because I think people also don't realize the board generally hires all the C-level executives, right? So the moment you start hiring top talent, the board is really involved, and that there's some areas that you can really steer the direction. I would never go to day-to-day stuff, because really the founders should be capable of taking care of that, but more on the strategic and this area.
I want to shift gears a little bit now. From the journalist perspective, it's an exciting time for the European ecosystem because we're seeing some winds of change. We're seeing some willingness to change policy to reflect a more competitive environment. And we've heard complaints from founders. We've heard complaints from investors. A big problem is the idea of a lot of market barriers that don't allow European ideas to really flourish. Are you optimistic about these changes? Like, have you followed the news, and are there things that you think will facilitate your work and the impact that you have set out to achieve with Evercurious?
I think it's generally changing, as you said, and to the good direction, definitely. I think we're very far away from the US standard, let's say. And that's, it's an unfair comparison, right? Because the US is a single market, single language, huge market.
Yeah.
Regardless of, how, as you said, Americans are all about the vision and, money is flowing a little bit easier and so on and so forth. But really on the market side, it's a single market. I think it's as simple as that, whereas Europe is fragmented. I think it does get a little bit easier for startups to scale across Europe.
Yeah.
But still, my advice is go to the US as soon as possible. I don't think this is changing anytime soon. Having said that, we think that European companies need to be pan-European as much as possible. And that's something we're really trying to achieve here. We're not looking specifically for Greek companies, for example, or any other geography specifically. We're trying to find how can we leverage Greece as part of a multinational startup, maybe headquarters in Switzerland, a few people in Greece, a few people in the UK, just each country has something maybe different to offer. Why don't we combine that into a single company and then try to compete worldwide?
I was curious because you mentioned that the advice you're giving to your startup. What is kind of the magic that Evercurious will be doing differently in the future? Because there are so many VCs that are coming up in Greece the next few years. So what is it that you do differently?
I think the one thing that we, both me and George, the other partner of Evercurious, were engineers, and we have been a bit through the process. So we're bringing a little bit this ex-operator, whatever you want to call it, vibes. And we speak a little bit the same language with founders. We see that every day. We resonate a lot with founders.
Yeah. You think they probably sort of sense it as well.
I cannot speak for them, but yes.
No, I bet they do. Right? Because it's not common. You're right. Yeah, and you have similar touching points and things in the conversation. Yeah.
So I think this is, it starts to pay off in terms of, meaningful connections with the founders. That's the one thing. And the other things that we really focus, as I said in the beginning, on the deep side of the technology, which is also, we see a shift there as well, but I think most VCs are generally looking for the easy to scale, low capex, software only kind of deals, whereas we're not afraid to go on the hardware side and go a bit on the riskier technology territory.
Get your hands dirty with the deep tech.
Yeah, so I think this gives us a slightly different edge than most other VCs. Now, if this is going to be successful, I definitely hope so.
In a year's time, I will be asking some of the founders that have actually invested in to see what they see in you guys.
So let's end this by sort of tackling advice. You gave us a lot of advice for founders, advice about investing. I'm curious, what was one piece of advice that you received by a mentor or somebody you trusted that you actually didn't follow in your trajectory? If you can think of one, and this could go either well or not, but I'm curious to see whether there's an advice you didn't really take at heart and how that went for you.
I guess there was a lot of consensus or advice from many people back when I was at CERN, for example, that I said, I want to just leave and go join a startup that might be bankrupt in 6 months' time. That is something that is really not going well for most of the academic world, and also, the older generation, let's say, where, you have to find a job, a corporate job, stability, blah, blah, blah. So that's something I'm very glad I didn't listen. And I said, no, I'm going to do that, right?
Probably worked out quite well for you. So
again, time will tell.
but I think it's, one key lesson here is, in general, sometimes you hear a lot of advice from people who have the same institutionalized thinking that you have. It could be good advice, but not every, there's always an exception to any rule. So I think even to all of the things you heard, like there are lessons you can take from heart, but we can all find the one exception that obviously did things very differently and it really worked out in their favor. So
I think it goes back to this consensus argument, right? If everybody was doing what everybody else was telling them that that's what you're supposed to do, then I don't know, everybody
will be in a different type of society,
exactly.
Like a purely homogeneous one. Yeah, absolutely.
And I think the startup ecosystem is all about outliers, starting from founders to investors to everybody involved, right?
So there are golden rules, but follow them.
Please break them.
But please follow them, but also please break them. Thank you so much, Alex Vamvakas, founding partner of Evercurious, live here from the DOERS Summit. Thank you so much for sharing.
Thanks. Thank you for the invite, guys. Thanks.
Thanks, Alex. Thank you for joining us for another episode of EUROPEBUILDS, where we show that the European ecosystem is no longer an underdog story.
If you liked our episode and want to hear more, follow EUROPEBUILDS on Spotify, Apple Podcasts, and Born's YouTube channel.